Hi, this is John Kamarianos. Welcome to a new edition of Capital Considered. It's June 3rd as I speak, and it's a beautiful day here in Rehoboth Beach, Delaware. I'm at one of my favorite spots, but I wanted to give you a warning about certain developments in the stock market. This chart shows how the S&P 1500 index has done since the war with Iran started. That is the red line on this chart, is the S&P 1500. The S&P 1500 is the 500 large caps, the 400 mid caps, and the 600 small caps. So it's a good broad market index. And you can see it's up about 10% since the war started. We've taken this chart back to February 27th, and we've run it through May 29th, last Friday. Again, the red line is the broad index. It's up 10% for that roughly 2-month period. The yellow line, I wanted to show how energy is done as well. You can see it went up for a while through the end, almost the end of March, and now it's come back down. So energy hasn't done that well, or it's done worse than the broad market. But the blue line is really the interesting line. That is the technology sector, the S&P 1500 Information Technology Index. It is up 30% for the roughly 2-month period from the end of February to the end of May, the period since the war started. Nobody knows the future, but a 30% rise for a sector in a 2-month period is rare. I think people get complacent and overconfident when things like this happen. Nobody knows the future for sure, but I'd probably stick with exposure to a broad market index like the S&P 1500, or that index combined with an international index. International indices have underperformed since the war started, but they're still ahead of the U.S. index for the whole year, for the January 1st up until the present period. So this is one of these unusual moments where one sector kind of goes bananas, the technical term that we can use, I hope, and don't let it fool you. It may continue for a while. Again, nobody knows the future, but I think this is a rare occurrence. And I've spoken to some who think this is an opportunity to own more technology. It may continue to do well, but I'd be a little bit careful. So, John Kamarianos for Capital Considered, signing off. Thanks for watching.
No information on this podcast should be construed as investment, tax, or legal advice. This podcast is not an offer for advisory services or to buy or sell securities. Before making any financial decisions, consult with a qualified professional advisor who can assess your individual needs and circumstances. Past performance is not indicative of future results, and all investments carry risks, including the potential loss of principal. Securities discussed in this podcast may be holdings of the host or his clients.